We're going to walk through it. All right. Sounds like we're recording. Let me share my screen. Okay, can everyone see that?
Yes.
Yes, perfect. Okay, well, I'd like to welcome everybody this morning. Let's continue the journey on your program. So let's go a couple startup basics here real quick, just to get everybody on the same page. One of the things that make the startup model unique from a traditional model is investors versus debt, which demands rapid growth. And at some point, there will be an investor exit. And that changes the way startups operate and their early stages. Now, as you're out speaking with investors, keep in mind, investors don't invest in products. They invest in opportunities. The product is purely one part of that opportunity. So you're not selling the investor your product. They're not a customer. You're selling a vision, how you fit, and why now. This is really what you're selling. Also, keep in mind that when you're talking, go out and start pitching to investors, it's a process. It's not a meeting. Too many startups get focused on the one meeting being the beginning and the end of everything. Statistically, in the United States, you will talk to 60 investors before you close your round. It's also, keep in mind, it's easier to get funded where you live. So that's one of the reasons we're working with Coyote locally, and the blockchain is to provide global collaboration and try to identify teams that can work together regionally where you're located. And it's about innovation, not invention. So when you're talking to an investor, the point isn't to convince them that you've invented something uniquely different. Innovation is primarily what we're looking at. Invention is what scientists do. So in the startup world, the fundamental message that's been around forever, or as we call it, the tribal standard, is investors are looking for unicorns. And what that means is that it's obvious that your idea is 10 times better than what's out there today. Now, one advantage today is that if you're incorporating AI into your product, it probably is 10 times better than everything that's out there today. However, all of your competitors are probably also incorporating AI into their solution. The next one is, can you show a clear path to $100 million? So those are the two standards that Silicon Valley investors and investors historically have looked for, creating unicorns. Now, right now, we talked about this the other day at the very first talk I did, but I wanted to bring this back up again. So right now, we're in the preparation phase. So most of you should be talking to angel investors, private investors. They're going to fund you to go through the validation phase and validate you have the right product at the right price. And then after that, you're going to go out and to be a successful company. You may get additional VC funding after that. So what we're talking about today is understanding what the opportunities are, have a plan, know what it's going to cost, communicate it intelligently. And that's what we're here to talk about today, is how to communicate and what are the messages for your startup. Now, you need to have all the parts in place. You can't make up the message without having the opportunity, knowing the plan, the cost, and have all that behind you. Now, once you get funded, the idea is you're going to go out and identify over the next 2 years and come up with the right product at the right price and scale. After that, it's purely about generating revenue. But today we're focused on how to pitch to the investors. At this point, the assumption is that you're in early stage companies and you're going to be looking for your seed funding. So too many startups and entrepreneurs get focused about creating the perfect pitch deck. It's not about the pitch deck. You have to have a great scalable business. If you don't have a scalable business and good team, if the opportunity is not there, the pitch deck doesn't matter. So you have to go through the processes of creating a great scalable business. Once you do that, then the message is simple and it's clear. But we're going to talk a little bit about what that message and the things that are critical for you as an entrepreneur. So when entrepreneurs present today, I have listened to thousands and thousands of pitches. Most entrepreneurs are pitching that they have the best idea, the best solution. You're the best value, you have the most benefit, and your price is perfect. And it's important to be able to pitch this. But if you're pitching the best solution purely, then that's more of a sales pitch to a customer. What the investor wants is an opportunity. Investors are looking for the best opportunity. All of you entrepreneurs standing in our lobby are selling us that they have the best product. But most of you haven't even built the product or finished the product yet. So there's no validation that it is the best product. So what you're really selling, like we said, is the future, the opportunity, the fit, and why now. So what are investors looking for? If you're solving a problem, I'm sure all of you know that as a startup, you're supposed to be solving a problem, right? So if you're talking to an investor, what problems are you solving for me? Why should I invest in you? Anybody got some thoughts on that? Okay. Investors are not complicated. We're looking for three things. The highest return on our investment in the shortest amount of time with the lowest risk. If that's you, I don't care what your product is you're selling. If you can return to me as an investor the highest return on investment in the shortest amount of time with the lowest risk, you will get our check. So that ultimately is the message you're trying to convey to the investor. Any questions on that? Because that's the part that most startups and most entrepreneurs fail to notice is that's why you show up selling us a product, not letting us know how you're going to get our money back to us. Now, common pitch decks that have been around forever fall into two categories. One is Guy Kawasaki, and the second one is Sequoia Capital. These have been around for 25 years. They're the go-to plan. If you, as an investor, we don't really care what order your pitch deck is in, as long as you're comfortable with it and it's clear, concise, and compelling. They should touch on these topics somewhere in the discussion, but put it together the way that you're comfortable. Make it yours. If you're not comfortable with the format, then you're not going to sound good. If somebody tells you that if you're going to pitch to somebody and they say we use the Sequoia Capital format, then by all means make your format in that order. But in general, put it in an order that you're comfortable with. Any questions on that?
No, no, actually.
Okay. So the next thing we're going to talk about is probably one of the biggest area that entrepreneurs
I do
struggle.
have a question.
Yeah, go ahead.
You stated that investors want us to pitch on highest return on investment, but isn't preaching to them that we have the best solution, telling them that they'll get the highest return on investment.
That is correct. At the end of the day, most startups are giving us a customer sales pitch. our product is awesome. Here's how you interface. Here's what it is. You know, customers are struggling with this, they're struggling with that, and so forth and so on. And that's important, but that's not for the first meeting. That will come later on in future meetings. Funding is a process. It's multiple meetings. It's not just one. In the first meeting, when you meet with an investor, all you're trying to do is get to the next meeting. And you're going to get to the next meeting by giving us a reason to want more information from you. If we don't want any more information from you, then there probably is no need for a next meeting. So we're going to want to look deeper and begin due diligence. That's why we're going to invite you to a next meeting. So it's about presenting your business case, not selling your product. Does that answer your question?
Yes. Do you mind giving out an example?
Sure. If I'm a car salesman, there's two people. You've got customers. Customers buy your product. They want to know about your product. What does it do? How does it do it? What's the value benefit for me? What pain are you solving for me as a customer? As an investor, I'm buying your opportunity. You have a good business case. You're low risk. You're high return on investment. Those are what we're looking for. The product is purely a checkbox. Does that make sense? Everybody has a product, but only you are you. And we're investing in you. The product's important, or we wouldn't be talking to you. So if I'm looking for healthcare products, I'm not going to listen to fintech companies. So if you come to me as a fintech company and present, then I'm not interested in that. So the product becomes important only for me as an investor to ensure that that company is in the space that I'm interested in funding. So if you're a fintech company and I'm interested in fintech, then we're a match on the product. And we'll figure out if the product is right later. But I really want to understand who's the team, what's the opportunity, can you do what you do, demonstrate to me that somebody actually wants your product. So these all come into play.
Okay, thank you.
Sure. So the key to that is because most entrepreneurs approach us, like I said, you approach us like a sales rep, selling us a product. You don't approach us like a CEO. Now, nobody wakes up in the morning and becomes a CEO. Generally, you start at the bottom in the warehouse and work your way up to a supervisor, then a director, and then maybe a vice president, and then eventually you become a CEO. In that 20-year journey, you learn how to think and talk like a CEO. But most entrepreneurs just wake up in the morning and they're a CEO because they happen to be the founder of their company. So it's critical to sound like a CEO, bring that leadership to the table. That is absolutely critical. Oh, so what we're talking about is when CEOs think, CEOs don't start with a product. They start with a vision. We see the future. We talked about this the first time. We believe the future will be this, or we see a future where people use their cell phones to do this, or we see a future. And because of the way we see a future, that helps us define what the opportunity is. Why now? What's the size of the market? What are the trends in the marketplace that are driving the fact that you're going to be relevant? Do you have evidence that there's demand for what you're doing? Where's your competition? And again, we're not talking about a product. Where do you fit in the marketplace? Are you headed in the right direction in the competition and competitive landscape? Because again, most of you haven't built your product. So you can't say our product is better. We have these features. The companies that are out there today don't do this. And you're not really competing with today's companies. You're competing with the companies like you that are coming out in the next 2 years. The companies today already have customers, always have revenue, already have profits. You're not competing with that. You're competing with the next generation, which will probably put them out of business. The problems you're solving as a CEO isn't the customer problems. How do you capture the opportunity? What are the strategic trends that you need to address? What about how do you solve adoption? How do you get people to adopt your platform or adopt your idea? What is the solution that the future has to have in order to be successful? Then we get to your product. One page. What is it? What does it do? How does it do it? Why is it important? Those are the only 4 bullets we really need to know about your product in the first meeting. If those are compelling, they're fine. And then what is the strategic plan? How do you get from today to my exit as an investor? Is your team capable of doing what they're supposed to do? Do you have gaps in your team? Are you still looking for people? Is the funding to help fill out your team? And then what are the financials? What does it cost? In most cases, what is it going to cost to get there? Cost you can do because you can get quotes and understand that. Projecting sales is always anybody's guess. But when we look at your financials, we'll look and see if your numbers are credible. And then, of course, how much money are you looking for and what are you going to do it? So as a CEO, you're talking like, I have a vision. I see a future where this is happening. And because of that, there's a massive opportunity. Here's the trends that are driving that. Here's why it's now. And here's the evidence that there's demand. And because of that, we've identified these market segments that we're going to go after. Now, the problems we have to address is how to capture the opportunity. How do we meet the tactical needs of the consumer or the user? And how do we make sure that we are using and utilizing and aware of enabling technology that's coming down the road, future tech, emerging technology? Are we going the right direction? We have a team that can do it. This is what it costs, and this is what we need. That's a CEO, not focusing on the detailed problems of a customer today. Formulate your business case from your vision. Understand the opportunity, trends, and customer. Have a plan and know what it costs. Back it up. Numbers, facts, measurable metrics. Where is the evidence? Don't just make statements like our customers are frustrated. It takes too long to do this. They don't know how to do that. This is fragmented. Those are not the right problems. Those are just customer problems. And you're going to fix all those inherently by producing a next generation product. Any questions on the basics of thinking like a CEO? Now, talking like a CEO is to take that mindset and put it into a discussion. And what we really mean, like we said, do you sound like an engineer or a sales rep? Or do you sound like a CEO or a leader? And when we're talking about that, it's vision, opportunity, direction. Leave the details for questions. Talk about the high-level direction of what you're doing. Investors will ask the detailed questions if they want more details. If you jump into the details, you're likely going to run out of time. You won't be able to get the point across. And in most cases, you'll make it more difficult for them to distinguish why you're different. Because now in the details, all startups, all of your competitors and everybody in your space that's making a next generation product like yours, you're all solving the same customer problems. So you all sound the same, but your vision, how you define the opportunity and how you define the direction that you're going is uniquely different to you in most cases. Now, as a quality CEO, if you're a good CEO, you should have the ability to talk strategically, jump down into the tactical detail and weeds, answer the question, and then come back up to the strategic level and continue the presentation. What happens most of the time, though, is most entrepreneurs are more comfortable in the details than they are in the strategic direction. So if they answer a detailed question, they tend to stay in the detail level and they lose focus on sounding like an CEO. Now they're back to sounding like either a developer or an engineer. Again, you sell your product to customers, your vision and business case to investors. And I cannot stress that amount. If you have not 10 slides in your presentation, one should be product. Everything else should be your vision, the business case, the financials, defining the opportunity. An opportunity is not a TAM. It's not a target market. You know, it's not the available market. It's not the obtainable market. The opportunity is a combination of a vision and a plan. And if that vision and plan match and looks like an opportunity, you will get the funding. If you look back at, for example, someone like Steve Jobs. Steve Jobs did not have an MVP. Steve Jobs had no product when they got funded. He had a clarity of vision of where the future was going and how they believed they were going to address that. They came up with the products later. Now, most people are not Steve Jobs, so you're not going to have the ability to sell it like Steve Jobs did. However, you can apply those same approaches of selling the idea, the vision, and the opportunity. If that matches, like I said, the customer, the product is purely the method to make that happen. So your CEO message is you have a clear vision and see an opportunity. You have a solution, a plan, and the team to capture the opportunity. That is your message. So we said that investors invest in opportunities. So how do you look at that? Like I said, an opportunity is a combination of a vision of plan. It's not market size. A large market is not an opportunity. It's a large market. You could have a large market with no opportunity. So TAMs and SAMs and SOMs, all these are nice numbers, and you should know what those kind of numbers look like, but they're not opportunities. Where is the evidence? That is the most important piece that's missing from most entrepreneur and most startup pitches. You have a lot of bullets that say great things, but there's no numbers and there's no evidence to back up what you're saying. Now, what you're saying, we may all in the room feel are accurate or feel are correct, but what's the evidence? So keep in mind the measurable number, measurable is critically important. If not, you're just sort of standing there waving your arms and making bold statements. So when we look at opportunity in 3 levels. First, define your market. Why is the market you're in? Why is it even a good market? So for example, in Africa, if you're in the fintech market, some might argue that you've already missed, that the fintech market has already happened and the fintech players are already being developed. So now the question becomes, why is fintech a good market today? 42% of startups fail because of timing. Now, do people have crystal balls? Do they see things that others don't? Not necessarily. But I was giving you that as an example. I was just talking to some investors in Africa yesterday, and many of them believe that the fintech market has already passed its peak. And now they're looking at things like biotech and so forth. Now, so that's important. Why is the market you're in good? Is there evidence of growth, evidence that the timing is right? Okay. Now we call that marketplace. Let's call that your sandbox. What sandbox are you in, and is that sandbox growing? Level 2 is what's going on in the market. What trends? What direction? Why now? For example, early AI startups were all basically just utilizing Chat GPT and incorporating it into their solution. Is that where the market trends are going, or is the market trends going somewhere else? Why now is a critical piece of information. So the market trends and direction should be driving where you go. And the third level is what market segments. So we're in this sandbox. The trends are driving it this direction. These are what's happening in the demographics. Here's why now, because people are using these, ready to do it, the technology there, all these things have come together. Now is the time. It's like stocks. You don't, if somebody on the street tells you there's a great stock option, you're probably already too late. And that happens to a lot of startups. They come up with an idea after that market space is already starting to get saturated with companies. So what market segment you're going after? So as a CEO, you should be able to spell out a message that says, we believe the future of the future will be this. And because of that, we see an opportunity that's the marketplace is growing dramatically. These trends are driving why now and showing evidence that there's demand. And because of that, we're going to go into market segment 1, 2, and 3. Not necessarily a specific customer yet, but the market segments you're going after. So that's what the opportunity is. The market is growing. The trends are driving the direction in the right way. And you've identified the right market segments to go into. Any question and opportunity? This is key to early stage growth. And as we talked about the first time I spoke, this is how you should drive your product, not just stand up and say, I'm going to build a fintech product because I know a problem that customers are having. So this is a big piece. This is how CEOs think. This is the high level section of why we should all be interested and excited of what you're doing, because there's an opportunity here. Questions? All right. Now let's talk a little bit about competitive landscape in your message. Again, keeping in mind that most of you do not have a product yet, or your product has just been released, or it's just in its early stages. So when we're talking competition, we're talking about business positioning and insight, not a product comparison. Because the expectation is you're 10 times better than everything that's out there today. So you have 3 competitor segments to focus on. Think about your competitive landscape as a timeline, not a product comparison. So in the timeline, you have 3 different types of competitors. You have incumbents. We talked about this a little bit, but I want to stress this because it's critical. You have incumbents. These are the companies that have been around for 20 years and been doing it forever, or they're not even, there's so many companies that it's a technology or approach. And these are then followed by the new kids on the block, which have companies that have been around for, let's say, 3 to 7 years. And they probably took what the incumbents are doing and made it a SaaS model or put it in the cloud. And then you have the people you're really competing against, which are those that are building a next generation product like yours. That is your true competitors. So in 2 years from now, when all of you have launched your products, you've done all the work and validated them and now made them the right product at the right price, and you're ready to explode and grow, and you all step out of your door onto the sidewalk, those are the people you're competing with. And most of the time, you won't even know who they are because they're like you in an incubator or an accelerator or a program or an early stage of building their product. So there you go. Incumbents, new kids on the block, and next gen like you. So now let's see how to present that. So let's say, for example, you said, we believe the future of business is going to be faster and action and generate action. It's going to be smarter. It's going to create action. So using this kind of a format, you've got faster and action. These are where you're saying the market is headed. So your message is like, we believe the future is going to be faster and result in action, not just information. So if you take a look at the companies and technologies and approaches out there today, they're not nearly as fast as the future of where we believe things are heading. They simply provide you information, and they're slow in the terms of what we believe the future needs. Now, the next generation, the new kids on the block, they have become much faster because they've taken things out of paper and taken them out of files and moved them onto the cloud and made them accessible to people. And so they've increased the speed of which business gets done. Now, you may or may not know of any next generation, but maybe you know of one next generation, and they're focused on creating smart AI-driven answers and action. However, they're not worried about faster because they tend to work in the healthcare space. Therefore, it's more important to be accurate than faster. If you're not accurate, people may die. But we believe that if you're not faster and creating an AI smart that creates action, you're headed in the wrong direction. So the purpose of this kind of a competitive landscape is to show the show the investor that you're headed in the right direction in the space, in your market space, and you've identified a gap. And that's why you're there. Does that make sense? Nowhere in here do we say that we're building a better product. What we say is we're headed in the right direction. Because you can build a better product, but if you're headed in the wrong direction, it won't make any difference. You're headed the wrong way. If you're headed in the right direction, we can always improve the product and adjust it to be perfect for the future. So give that some thought when you're thinking about competitive landscape. Any questions on competition? Like opportunity, this is the other area that many startups just don't approach correctly. They try to convince everybody that their product's better. You know the one, Excel. How many of you have an Excel spreadsheet that says, here's the features, here's our competitors, we have all the yeses or X's or checkbox, and our competitors don't? That's a nice chart to ensure you're building a better product and that engineering is focused on the right requirements, but it's not the right one for your initial presentation to an investor. Okay, now let's talk about the problem. Again, this is an area that you need to talk about and work through when you're pitching to investors. But you're talking about the strategic problem. How do you capture the opportunity? The tactical problems, the one that your customers want, you're going to be 10 times better. So you're going to solve those problems inherently if your product's right. But the other key problem we want to be looking at is what are the future? Adoption and emerging tech. Those are the critical pieces there. Now, once you've identified those, now we get to talk about your product. What is it? What does it do? How does it do it? Why is it important? One sentence, easy, simple. It's a bicycle. What does it do? It moves you from point A to point B. How does it do it? It does it with the use of human power. Why is it important? Because it will always be the most efficient form of transportation, period. Now I've left the investor compelled, and now they'll ask questions if they have any. And then after the product, I want to get to the most important part of your message is why you. And the why you could be a range of things. You have patents. Maybe you have a business model that's unique. Maybe there's the approach to how you're doing something that is different than everybody else. Maybe you have people on your team that allow you to have an unfair advantage. Or maybe you have partnerships that give you an unfair advantage. You don't have to have all of these, but identify why you. These are what's more important. Everybody in your market space that's doing what you're doing claims to have the best product. And since we're so early without any you know, 2 or 3 years of proof, nobody knows what the product, if that's the right product. But if you have some protection for the idea, you have a unique business model, you have a unique way of doing it, your team has things, you have partnerships that give you an unfair advantage, then if you're solving the right problems and you have the pieces in place, then the product just checks the box and say, yeah, that looks like a good product. Any questions on problem, solution, and your product? Okay. So this all really brings us to the end of what I was going to present. The key to presenting in your message is to understand the vision and have a clarity of direction. Speak strategically. Don't sell me the features. Don't sell me that you have an easy login screen. Don't sell me that you have these features in it, because at this point, we don't know if these are the right features or not. It's too early. Be confident. Confidence is the most important. And if you have built the business, you understand a sustainable business, you understand the details, you have the numbers that validate the market, this will make you confident. If you know you have gaps and you know you have problems and you know you have things that need to be addressed, then you're not going to be confident. And passionate is not a problem most startups have. Most entrepreneurs are passionate about what they're doing. Lead by example. Be a CEO. As a CEO and as an investor, we're looking to see if you're a leader. When you're speaking, we ask you questions. Are you confident? Are you passionate? Do you lead by example? Do we believe that people will follow you? If you sound like an engineer and you're not confident and you're giving me too much details on design, as an investor, we're not confident that people will join your team, that you could lead a team into success. And in many cases, it may be that the team together leads by example. But as a CEO and as the leader, you have to have that confidence, and you need to lead by example, because the people that you bring in to run your company or working with you will follow your example. Oop, wrong button. And that was basically what I had for you today. The pitch deck is simple and the message is simple if you did the homework and the work up front to understand what the opportunity is, define the trends, understand the direction it's going, why now, and have evidence to back it up. If you've created a detailed model and you're confident on what it's going to cost